Everyone wants to get rich investing. That's a given. But as we head into 2025, a lot of people are quietly making decisions that might actually hold them back. It's not because they aren't trying. It's because the playbook that worked for the last decade might be the wrong one for the next. In this explainer, we are going to dive deep into two massive engines that are set to drive wealth creation for the rest of this decade. So stay with us. This might just be the most important financial reality check you'll get all year.
All right, let's just jump right in with a single really powerful number, 70%. Now, what is that? Well, according to the International Monetary Fund, that is the slice of global economic growth that's projected to come from outside the United States over the next 5 years. Just take a second and let that sink in. For every $10 of new economic value created on this planet, 7 of them, they're going to be generated beyond America's borders. You see, this isn't just some small shift, it's a fundamental rebalancing of the world's economic engine.
Look, we've all had a front row seat for the incredible run of US stocks. The rise of companies like Apple, Amazon, and Tesla has been nothing short of meteoric, right? They've defined a whole generation of investing and built an absolutely staggering amount of wealth. But that very success raises a really critical question. Is the strategy that got you here the one that's going to get you there? Is your portfolio built for where the world has been or for where it's going?
To figure that out, we've laid out a really clear roadmap for you. First, we're going to talk about why we even need to rethink the old playbook. Then we'll break down the two powerful engines of future growth. Engine number 1, disruptive technology, and engine number 2, the massive global shift in economic activity. After that, we'll show you the magic spot where these two engines converge, because that's where the most powerful opportunities are. And finally, we're going to make it super practical and show you how to start building a truly global portfolio for 2025 and beyond.
So, let's start with a hard truth, shall we? The investment landscape of 2025, it's just not the same as it was in 2015. The forces that created the big winners of the last decade are changing, and frankly, an old playbook might not be enough to navigate what's coming next.
And this quote just captures the urgency of this moment perfectly. You know, the question is no longer, hey, should I maybe invest a little bit outside of Wall Street? The real question is, can you actually afford not to? It completely reframes the whole conversation from a simple choice to an absolute necessity. And it sets the stage perfectly for the two big growth engines we're about to dive into.
Okay, so our first engine is all about the what. It's about technologically enabled disruptive innovation. And to really get our heads around this, we're going to look at it through the framework championed by people like Cathie Wood of ARK Invest. The core idea here is that we are at the very beginning of an explosive period of change, all driven by a handful of core technologies.
Now, what's so fascinating here is that these aren't just 5 separate trends happening in isolation. No. According to ARK's research, these are 5 foundational innovation platforms that are starting to converge and crash into each other. So think of them less like individual silos and more like ingredients in a recipe for some radical transformation. You've got AI merging with robotics, energy storage is making them both possible, blockchain is creating brand new economic models, and multi-omic sequencing is totally revolutionizing healthcare. It's this convergence that creates the explosive potential.
So, what's the science behind all this? Well, there's this principle called Wright's Law. It sounds kind of academic, I know, but the concept is actually simple and unbelievably powerful. Basically, as we produce more of a technology, say batteries or gene sequencing, we get better, faster, and cheaper at making it. This drop in cost is predictable, and it's the force that takes the technology from being some expensive niche product to something that's suddenly available to everyone. It drives mass adoption, it transforms industries, it's kind of like the hidden engine behind the engine.
And right at the heart of all this convergence is artificial intelligence. Cathie Wood calls AI the single biggest disruptive force in human history. But the key point here isn't just about the opportunity, it's also about the threat. For every company that figures out how to use AI to create enormous value, you can bet there's an older company that's going to get disrupted right out of existence. So the question for you as an investor is, which side of that change are you going to be on?
Okay, let's make this real. The number one example of this whole thesis is Tesla. A lot of people, they still see it as an electric car company. But from an innovation perspective, that is completely missing the forest for the trees. The car, that's just the hardware. The real value, and the reason ARK Invest calls it the largest AI project on Earth, is the autonomous driving platform it's building. The millions of cars on the road right now, they aren't just driving, They're collecting data, they're training a massive neural network, and they're creating a software business that could end up being way, way bigger than the car business itself. And this just perfectly illustrates that long-term vision. The electric vehicle business, that's just phase one. The next and much larger phase is the robo-taxi network. ARK thinks this could be an $8 to $10 trillion market. In fact, get this, they say that 90% of their future valuation for Tesla comes from this autonomous platform, not from selling cars. And beyond that, a potential $26 trillion market for humanoid robots, all built on the same core technologies: robotics, energy storage, and AI.
Now let's see how this same idea of convergence plays out in a totally different world: healthcare. Here you've got AI, gene sequencing, and CRISPR gene editing all coming together to do something that was pure science fiction just a decade ago, literally curing diseases at their genetic source. I mean, you've got companies like CRISPR's Therapeutics already using a one-time treatment to cure devastating blood disorders like sickle cell. This isn't just a small improvement, it is a fundamental shift in what is possible for human health.
All right, our third case study is Bitcoin. And it's really important to get how innovation investors are looking at this. This isn't about crypto speculation. It's about the creation of a fundamentally new institutional asset class, the first one since equities back in the 1600s. And the key feature for your portfolio is that its performance doesn't really correlate with stocks or bonds, which means it provides true diversification. It's seen as a global, decentralized, rules-based monetary system, almost like an insurance policy in a world of really undisciplined government spending.
So where does that thesis lead? Well, ARK has put a really bold 2030 price target on a single Bitcoin, $1.5 million. Now, of course, that's a projection, not a guarantee, but it's based on three key things: massive adoption by institutions, its growing role as digital gold, and pay close attention to this last one, its use in emerging markets as a way for everyday people to escape unstable local currencies. And you know what? That final point is the perfect segue to our second engine of growth.
Okay, so we've covered the what, all the disruptive technologies. Now let's pivot to our second big engine of growth, the where. This is the powerful, data-driven case for looking beyond US borders and investing where all the economic momentum is actually building.
And here we are, back at our opening statistic, but now you can see it. This chart just makes the argument undeniable. When 70% of the world's economic expansion is happening outside the US, a portfolio that is 100% focused on the US is by definition missing out on most of the action. So diversification, it's no longer just a defensive strategy to lower your risk. It's an offensive strategy to capture growth.
So when we talk about investing globally, what are we really talking about? Well, it pretty much breaks down into two main buckets. On one side, you have the developed markets. Think Japan, Germany, the UK. These are stable, mature economies. They tend to offer lower risk and often pay out strong, reliable dividends, sometimes double what you'd find in the S&P 500. And then on the other side, you have the emerging markets, places like India, Brazil, and Vietnam. These economies are growing way faster, fueled by an exploding middle class and booming consumer spending. They come with higher potential returns, but, yep, also more volatility.
So why is all this so important right now, in 2025? Well, it's because several key catalysts are all coming together at once. First, you have valuations. A lot of international markets are just plain cheaper than US stocks, some by 30 or 40%. Then you have currencies. If the dollar weakens, that could act like a tailwind for your foreign investments. You've got higher growth rates, pure and simple. And finally, you have the fact that innovation is no longer a purely American story. It is happening absolutely everywhere.
And this brings us right to the core question of this whole explainer. We've just laid out two really powerful engines of growth. One is about what you invest in, those disruptive technologies. The other is about where you invest in global markets. So which is it? Where should you put your focus? Well, the truth is, that's a false choice. The most powerful opportunities, they don't live in one camp or the other. They live right at the intersection of these two massive forces. This is where technological disruption meets global adoption.
The simple, powerful answer is it's both. Innovation today is completely borderless. The smartest investment strategy isn't an either-or choice between tech and geography. It's a both-and strategy that understands that the two are totally intertwined.
And this is a brilliant way to think about it. Instead of just picking a country, you pick a theme. For example, if you want to invest in the clean energy revolution, guess what? You'll find many of the leading companies are in Europe. For cutting-edge semiconductors, the manufacturing is dominated by Asia, specifically Taiwan and South Korea. AI development? Yeah, that's currently led by North America, but its application is global. And something like cybersecurity? is a fundamental need for every single company and country in our connected world.
When you adopt this thematic global view, it's a huge mindset shift. You go from being reactive, panicking about every headline from China or Germany, to being proactive. You start to think like a global capital allocator, hunting for the best opportunities and innovations, no matter what flag flies over their headquarters. You're basically investing in humanity's collective progress.
All right, we've talked about the big ideas. Now let's bring it all back down to earth and talk about how you can actually put this stuff into practice. How do you build a portfolio that really captures both of these growth engines?
Here's a really simple, balanced model that a lot of wealth managers recommend. And notice, this is not about abandoning the US market at all. It's about complementing the stability and innovation of the US with some targeted global exposure. So a 70% allocation keeps the US as your core. Then you add 20% in developed international markets for that income and diversification, and then 10% in emerging markets, specifically to capture that higher growth potential.
Anyone know the best part? This is easier to do now than it has ever been. You don't need some special overseas account. Through any standard brokerage, you can buy what are called exchange-traded funds, or ETFs. An ETF like VXUS, for example, gives you instant ownership in over 7,000 companies outside the US in a single transaction. If you want to get more specific, VEA targets developed markets and VWO targets emerging ones. Literally, with one click, you can achieve a level of global diversification that used to only be available to the biggest institutions in the world.
So we'll leave you with this final, crucial question. It's really a challenge to look at your own investment strategy and ask honestly, are you positioned for the reality of the next decade? Is your portfolio built on the assumption that the past is just going to repeat itself? Or is it designed to capture growth and innovation wherever it happens on this entire planet? At the end of the day, building wealth isn't about being perfect. It's about avoiding the traps that keep most investors stuck. The trap of only looking in your own backyard for opportunities is a big one. If you can start to think globally, you're already ahead of 90% of people trying to grow their money in 2025. Start consistent, stay disciplined, and let time and diversification work their magic for you. If this explainer helped you see your financial habits in a new light, like it, subscribe, and share it with someone who needs to hear this message. Here at Invest Education Hub, we turn financial complexity into clarity, one smart decision at a time.